Ladies and gentlemen, welcome back to the monthly review column of China's carbon trading market. This is the International School of Low Carbon Studies in Shandong University of Finance and Economics. Still me, Wang Jingming, the host of this program. Today, I'm going to deliver the August 18th to September 10th review of China's carbon trading market. Welcome to give your opinions or valuable suggestions in the message board. Until September 10th, the national carbon market has been in operation for 2 months. What changes have taken place in the market after the good start of the first month? Let us sum up the characteristics of the market trend in the past month. First, carbon price started the downward channel and fell by 13.73% in the month, which brought a strong wait-and-see atmosphere in market traders. Until September 10th, the national carbon market had 41 trading days with a total transaction volume of about 8.45 million tons, 416.4 million yuan, and an average transaction price of about 49.3 yuan. Meanwhile, the turnover in this month was about 1.93 million tons, 70% month-over-month decrease, and the average transaction price was about 45.2 yuan, 10% month-over-month decrease. This month, the carbon market traders was depressed, and the market heat was also continuously cooled. The carbon price kept falling in the downtrend channel, and then it continued to bottom out after breaking down the issue price of 48 yuan per ton, with the lowest price falling below the 42 yuan per ton platform, and even down to 40 yuan per ton mark as shown in this figure. There is a strong wait-and-see atmosphere between buyers and sellers in the market, and there is a lack of incremental capital inflow in the market as well. Maybe the carbon market reform is not as expected. The market operation needs to be changed by external factors so as to reverse the traders' continuous downward expectations of carbon prices, attract funds to speed up entry, raise carbon prices, and ensure that the carbon market can fully play its role in ensuring emission reduction and promoting transformation. At present, due to low engagement of market traders, only some traders dominated the change of carbon price, which brought arbitrariness in the market. Moreover, with a slight increase and dramatic drop of price, the market short side is dominant, resulting in the continuous downward trend of current carbon price, as shown in figure number 2. From a technical point of view, the key line of carbon price breaks through the bottom of the box of 50 yuan per ton, and the shadow line of key line appears less frequently in the month, so that the price is closed as a word board and the gap between long and short sides narrows down. With traders leaving the market to wait and see, the carbon market gradually turns to a weak market, as shown in figure number 3. Second, the market turnover is almost zero, difficult to form a strong support for the carbon price. In the month, the trading volume decreased day by day with a sharp fall in carbon price, and only 4 trading days saw a slight increase in trading volume. That is to say, the current market is still characterized by the price up and the volume down, and the block agreement transaction is an important channel for sellers to sell chips, as shown in figure number 1 and figure number 4. Please take a look. At present, the continuous decline of carbon price is strongly related to the carbon allowance liquidation before the expiration of the compliance period. Because China's carbon quota has the characteristics of full amount and zero cost, in order to release the pressure of its performance, the seller sells the carbon allowance at a lower price, leading to the continuous decline of the carbon price, and resonates with the buyer's downward expectations of the carbon price. So the carbon market enters a negative cycle. Therefore, it is particularly important to accelerate the reform of the carbon quota mechanism for the smooth operation and healthy development of the carbon market. However, on the last trading day of this month, the carbon price soared, which opened up the downward channel. It is worth noting that the trading volume did not change simultaneously. Therefore, the current increase in carbon price may only be a counter-pumping under the oversold market. That is a false breakthrough. Later, traders still need to pay attention to the price risk. Well, the above is the trend analysis of China's carbon market in the second month. On the current stage, there is still some time by the end of the first year compliance period. The companies entering the market in the early stage have completed most of the transactions, while the quota surplus and shortage transactions of other companies are not urgent. At the same time, the scope of transaction participation is limited to power generation companies, and the market subject is relatively simple. Therefore, the recent market trend has been slightly weak, which probably belongs to the normal scope of the early development of the market. Next, whether there will be any relaxation of the restrictions on the entry of trading entities and where the market will go in the future, we will wait and see. And in the end, I would still like to thank you, our analyst, Professor Peng Hongfeng, and your master student Ma Shiqun, who put great effort on our daily, week, and monthly review of China's carbon trading market. Please scan this QR code on this board and follow our school's WeChat official account. You may find more daily updated news there. Thank you for watching and see you next month. Bye-bye.